Hello, welcome back. Let's do a end of day review today. It's July the 6th, 2023, and it's a Wednesday afternoon or evening. So at this morning when we do a first trading hour, we see that it's bearish, but it turned out that it make a reversal around 11:20, and then 11:25. You see, you can call right here is the double bottom. So what we see right here, we see this order block, retest order block, fair value gap, retest right there. So we can entry right here if we want to. This is our order block right here, right? Oh, right here. But if you look at the 5-minute time frame, right here you can check is this is order block, right? Order block, go up here, fair gap, here the retest. Yeah, I mean it's very, but it's not so clear and like a clear-cut setup for you to entry neither. So it takes a lot of experience in order to enter a long position right here. Then look at the 4-hour time frame. You remember this morning? I mean, it is, you see, like from here we see the bearish breaker break away from there, basically go all the way down here, which is another bullish breaker. It retests that level, but then it come up, go up again. This is very interesting to see how the price action is moving like that. So basically it's order gap right here or few, and it did retest this bullish breaker right there. So it's a huge move from here, but you never catch them because it's very hard to trade them, right? This is all pre-market. So how you trade them then? If you short them and you don't get out in time, you will get crushed right here. You see it move up here, it take all the buy side liquid right here. So if you short right here, you still hang on your position, you get stop out, you get crushed, and you get frustrated because you have a profit and you don't take it. So it's a very tricky market right there for you to trade, because the algo is run very efficiency, right? Basically maximize the transaction. It doesn't care who you are. It care about maximize transaction, buy and sell. It want the transaction buy and sell as many as possible, because the exchange charge a fee for transaction, right? For both the matching fees for both the seller and the buyer. It's an auction process right there. So let's go back to the 1-minute time frame right here. You can see that maybe it fit into our weekly profile, which is Thursday is a reversal, right? It's a reversal day. So if we short right here at the open, 9:30 open, then we have to get out when it reaches this level. I believe this is it is the here is a bullish breaker is on what day is that? June 14. Almost a month ago. This is June 14 breaker right there. We should leave it there. You see right here, that level is from this candle 9-hour candle, 4-hour time frame right there. So it's reached that level right there. You see that? Oh no, this is a level. Yeah, it reached the level. This is one of the key level. Very interesting, huh? Is that 4-hour fair value gap? Let's see what you say. Yeah, I said open barrier breaker 437. Oh, 437. Where is 437? Up here. Oh, yeah, right here. I think this one. Right here. Yeah, which is June 14. And June 14, what the June 14 is up for on what day of the week? Let's look at the calendar. So June 14 is a Wednesday. Hit at the Wednesday level. Right here, you see, at the Wednesday level. And it bow back. Very interesting. So June 14 is a Wednesday. So reach this level and then it reversal, it go back. You see, it go back at the. So it's close very nearly the 79. But the 9 open. But I don't see why right here. Yeah, I think that's the aftermarket number which might change right there. I mean, is there any way for us to spot the reversal? Can we? How do we come up with the reversal scenario? Man, here June 14. Yes, June 14. You see, if you look at the 4-hour time frame right here, that is the open of this candle. Wow, exactly. You see, yeah, this morning we did anticipate that because we saw it for right here. Wow, so that's a very key level here on Wednesday. So if we short right here, then this is going to be our target. And we have to take profit, otherwise we get killed, get crushed, get stop out, and you'll be more frustrated. So June 14, the candle at night is a critical level right there. Let's take a look at the D1 daily hour. What do we see daily hour? We see weekly. Yeah, I mean, we see the pattern yesterday, right? If we have experience, we know the kind of pattern, then we go in and do what? We see that break right here. Let's break a structure. I mean, you can take as a market shape structure right here, right? And then it go up here. Then we short them and hold them overnight, you know, and then after open until we reach our target. Yes, so we learned the lesson that if we are follow the price action, we don't have to wait until 9:30 to engage. You can engage the day before. Yeah, if you want to catch a big move right there, the day before. Yeah, we can engage the day before, you know, right after, before it's closed, the last hour right there. Engage them and then hold overnight. Yeah. Yeah, you can treat this as the auto block. You see, come down auto block. You see there's some web filled up right there. Go and retest that auto block at 49. It's the auto block right here. Move away, move away. Oh, and short them. Then you hold this. Yeah, if you hold that trade right there and all the way here, you make a huge move like that, 37, right? And up here, maybe a $4 move. You see, all the pre-market in there. So you're not going to engage here. So I will completely control. It's very hard for you as a human to engage, but we found a way. We will get there. Maybe not now. It needs more practice, more exposure to the price action and gain more understanding of how they, you know, generate liquidity, how they manipulate the liquidity, right? The reason is go up like this because there are a lot of people short right here, so I go up, take the short out. You see a lot of short right here. That means huge buy side liquidity up here, so it go there rapid buy side liquidity, and there's no liquidity there that it start go down because the huge liquidity right here, right? We will buy into that, right? We will buy low right here and buy right here. A lot of people buy right here, so it's come down for the liquidity. The same right here. So the logic right here, why it reversal? Because too many sell side liquidity, too many buy side liquidity right here, so huge. So you need to go up and check the liquidity transaction, right? That's the thing. Just keep in mind that the stock exchange run by the algorithm, and the algorithm is optimized for liquidity, where the seller and the buyer gonna execute the order. So they match the order between the seller and the buyer, and they charge the fee for that. So they don't care who is the buyer or who is the seller. All they care that they want the transaction take place, so they can, you know, charge the fee. That's our theory right there. It's because it's a stock exchange or it's an auction model, right? Auction model between the buyer and the seller. So the guy in the middleman just charge a fee for both. They don't care if the seller lose the money or the buyer lose money. They don't care. They just middleman charge and get the money for both sides. They make money, do a lot of win or lose. So what our game plan for tomorrow then? Because you remember yesterday our game plan that if it's barrier breaker, it break through below and then it's retest and we enter a short position. However, we not get up at 5 o'clock to do that. We get up 5 o'clock, we have a huge move right here. Get up right here, $41, and right here you get a $6 move right there if you can get up at 5. Okay, so our lesson learned that we can engage here at 13 hour candle right there. We can engage right here. Actually last hour if you look at the 5-minute time, and that it run for the following day. So now go back to see what is our game plan for tomorrow, Friday. So if you see the big move on Thursday right here and it reversal, then maybe the Friday it's gonna make a huge move. Maybe it's gonna go back here, retest this, so we can catch the move. We catch right here if we go long, that, and then it go down. That's two scenarios. We can go long, catch the retracement, or retracement back, and then it's going down. So here's our game plan right here. If we test this barrier breaker and then it go down, let it go down, take a buy side liquidity. That's our theory right there. That's our anticipation or our logic right there. That would be nice. So either we're going can go long right here, we catch it move, or we short to get a bigger move right here. So let's see how market play out tomorrow. And remember, it's the payroll tomorrow. Look at the look at the high impact news calendar so we can know what coming up first. Okay, here's the high impact new calendar, right? We have is that today? No, let's say it's tomorrow. Non-farm payroll release Friday, tomorrow, right? Let's take a look at the market calendar. Alright, we found it right here. So tomorrow will be a employment PMI, major loss of new today. Employment situation. What's this employment situation right here? Yeah, I like to do right here. Here we go, situation non-farm payroll. Sure. date. Public on the first Friday of every month. Okay, so first Friday of every month. So, yep. So that's the non-farm payroll right there. Very tricky to trade with that. But another thing is that we have the CPI next week. So let's see how they manipulate. You see a big gap down right there. So I believe maybe tomorrow it come up right there, and that gap, feel that gap, right? And then it's and then it's going down. So that's our thesis right there. That's our anticipation. Let's see how it's play out. And look at the volume for today. It's not huge at all, right? The volume for today is about 58,000 right here. 58, which is slightly, pretty much stay the same like yesterday. Yesterday 58,275, and now today 418 and 432. So the volume pretty much the same. And let me see what is right here. So today the SPY dropped about 0.78 with a low volume. So it dropped 0.78. Yesterday it dropped 0.75. So it's there a sell up right there, but it's not a huge big sell. So to trade in this market, you have to know exactly what you have to do. You have to be completely, I don't know, maybe 5-year experience on it in order to do, you know, stay profits in this kind of market condition. But if like for new beginner like us, we try to run, we're not there yet. I don't see we're there yet. But you know, stay positive. We're getting there. Just keep at down and have a strong, you know, mental picture that we're getting there and getting better every day. And we're getting better every day. We could be a successful, you know, day trader. Believe in ourselves, believe in our mind that we can do it, you know. Yeah, that's the bottom right there. But one thing we can see that today, the DR model is violated. It's very interesting that you see you have confirmation, right? The DR model said that at 10:30 you know the high of the day and low of the day. If you have a 5-minute candle, let's say close below the low at 10:30, then you have a confirmation that the high of the day will be the DR high. But in this case it violate. Okay, it come down all the way here and then it come out up. So this also a retirement setup. If you are experienced enough, or you know, brave enough to take a long trade right here. So basically that's what you see. But how do you see the setup right here? Any order block, failure gap? Oh, you know, we don't see anything right here. It's very tricky to trade also. Okay, let's take things out of it. So we don't have much comment. Any time of entry today, so we know. Yeah, around 11:25. You see, the interest is right here, 11:25. That the time is reversal, so you can place the order right there. Retest them. Very interesting. We still don't see what our entry, but we need to log that in. So we can say that this is a Thursday reversal setup. We don't know. We have to put a question right there. Well, we're not sure. We want to see how it behaves. Tomorrow, right? We did come up with the theory that if we're gonna go up, retest the bearish break up here and then it's going down because there are a gap in there. So that's our logic, right? So today is a no for the DR model, right? At 11:25. So basically we say that confirmation, right? Yeah, today also a rain day. Today is a rain day right there, over the 9:30 and then. But I don't know why it says drop. You see, it's over the 9:30. But how so? They say perhaps 78. I don't get it. Because I know the SPY calculate the open at. You look at the D1. It's very strange. That's the reason why I don't like the SPY. The ES, the future of SPY is much better. The data are much better. Then look right here. I don't get it. It says it dropped, so it's count from the close of yesterday and the close of yesterday and the close of today in order to come up with the percentage difference. It doesn't count on the open of today and close of it. Count on it's count on the close of prior day and the close of today. It's very confusion right there. Yep. That's our 5-minute time frame. Do we see anything else interesting for the review today? Oh, that's our theory right there. Let's look at I mean, for the smart money diversion, the QQ look more bearish, right? Because it go up here at this bearish breaker right here, right? Right here, the whole thing right here, you can treat this as a bearish breaker, and this one is fair value gap right here, right? Displacement fair value gap, and it retests, then it's gonna come down again. So but for the SPY, we don't see it's really go up that level. Yes, it's still a gap right here, so we want to see maybe tomorrow. Yes, it's around here, this level that I'll anticipate right there at this level. Yeah, I think we did anticipate that. Right here, we want to anticipate this level. Okay. No. Yes. We want it to be like that. Retest is a bearish breaker for us, and then it come down. Okay, that's our thesis for tomorrow. Right here, and then short them. So today we spoke to take a trade, but we couldn't check it because there's no, no setup for us. We cannot pull a trigger. I mean, we're about to pull a trigger around here, right? Because we see that, the bearish breaker right here, and the displacement fair value gap, and a retest twice that we should enter right here. But for some reason we get distracted. We could not pull the trigger. So that's the lesson learned for it. If we pull the trigger there, then sure, we can have $1 move for it right there. So that's a lesson learned for us. And I think we did lock that trade. Yeah, we did lock that trade. Right here, we did lock that trade, I think. Yeah, we did take a stop loss. You see, it's a twice short up, and our entry is at 9:48, but we did not identify our target. Yeah, we didn't see the target, so yes, so we have to add in our targets, right? Our target gonna be the at least level right here. So if we go with that trade, then our target is right here. But this is very key level right there. It will be a bullet breaker open X4 on June 14. Yep, it's on Wednesday, and at level 437, 150. Well, if we can do that, if we can take that trade, we're not there. Yes, we get in there. Then we make a decent move right here, right? So 37.15. Let's say we enter around here. 39, so it's about $2 move right there. All right, that's it for now. Thank you, and talk to you later. Bye.